So hopefully a few people show up. I'm very excited for the stream today. Um, that being said, before I get into it, and I'll do it again later because everybody says these disclaimers, but I actually believe it for good reason. Um, I do this stuff for entertainment. That's legitimate. I'm not a financial advisor, also true. And I think you guys need to do your own research, which is also true. So, as always, please don't listen to me or anybody else on YouTube when making your financial decisions. This is important. You need to do your own research when making your financial choices. Potentially reach out to a financial advisor to get some advice on it and do your own research. The reason I say it's so important is, when you talk to an advisor, their first question should be things like, what's your goal for your investments? And they should get an overall picture of, hi, Lily, sorry I didn't say hello. They should get an overall goal, like overall picture of you, your goals for your money, your income if you're still working, how much money you have saved. Like, there's so many variables that go into some of the questions that get asked that listening to somebody else or doing the advice that they give just really may not make a lot of sense for what fits what you want to do with your investments. Anyway, separately, yesterday was Chinese New Year. I don't know if any of you got to celebrate, but it was awesome. And when I say awesome, so my wife is Chinese, and so my son is obviously half Chinese, but a lot of the friend group, like three of his good friends that he had for the past few years, they're all Chinese. And one of the dads invited us over to his house so the kids could play because they have such a good, like, when they get together, they have so much fun together, which is super cool to me to watch. And all really nice kids, so I don't stress about, is one of them forgive me, just like a jerk or something. But so they get together, they hang out, they have fun, they played all sorts of games, and he just cooked a massive feast. Not thank you, happy Chinese New Year, Lily. And it was so cool. Like, not only did he make a feast, each dish that he made had different meaning and reason as to why he made it. So I just thought all of it was so cool. We made dumplings. I actually helped kind of put them together and stuff, which was fun for me because my mother-in-law makes like the greatest dumplings you may have ever had. So it'd be cool if I could actually do it and help a little bit instead of just sit there and watch it and eat. But so he made dumplings, he made ribs, he made shrimp, he made a couple different noodle dish, some that he was doing like tofu noodles instead of just regular noodles. And each and every dish that he made had, like I said, had different meaning, which was kind of cool to me. He must have made enough food for, I don't know, 30 people, and there were like 12 of us. But then they played all sorts of games, which was pretty cool too. So every time we tend to hang out, they do different things, whether it's this friend or the other. And I really want to do more of it because it's always so much fun for the kids. They played like the equivalent of what I think of as beer pong to some degree, but it was kids' version. And in each of the cups was a little like prize that they could win, whether it was a red envelope or little snacks or things of that nature. But the kids get so into it. And then we actually played a little bit of poker, which was fun as well. Again, I don't know how many of you, if any of you, were even aware that it was Chinese New Year, but man, they really know how to do it up. And I know, since I said my wife is Chinese in China, like, businesses close, people go home to hang out with their families. It makes like Christmas and stuff like that look like nothing, and they do it for a long time. They eat tons of food, and everybody kind of knows the gift they're going to get. They go around and give out these red envelopes that have money in it. So the kids get super excited because who doesn't like a gift of money? Anyway, all of that's totally off topic. Let's start going into the markets a little bit. The first thing, like, forgive me because I know sometimes, like, oh, and I got my coffee. I don't know if you guys have something. By all means, feel free to tell me if you have what you're sipping on or what you're enjoying. Or I know Ryan Williams says that sometimes. I don't know how many you watch him, but he's really good. And anyway, I won't give shout outs to everybody I love, but I do. Um, Now, a new one that popped up to me because they were talking about it on CNBC, so feel free to throw out if you guys have any things you want to look at. But I haven't even looked at it yet. But I saw a little bit of they started talking about Ford, and I guess Ford is going into a relationship with either a or multiple Chinese EV manufacturers to potentially bring some of the vehicles here or do some sort of joint effort on it. Now, as somebody who's been to China a few times, we've gone 3 times in the past 2 years, and a couple of them, I mean, we went for like 8 weeks or 7 weeks one time, and five another, and recently we just went for another 2.5 weeks to go run around and do stuff. When I tell you that their EV market or the manufacturers put ours to shame, even Tesla. Now, there are plenty of Teslas running around out there, but I think it's because people like the name, not based on like the things that the cars offer. Because when I see the EVs that I've seen in China, oh my God, there's no way to even explain how much better they are than ours, and they just like they've got to be 10 years ahead of us. So if Ford's able to get into a relationship with some of them to help bring some of those vehicles here or potentially work on some joint venture to put something in Ford's name, as much as it's just a company I never really look at, it had me opening my eyes and kind of looking at it. The only thing that I don't like about Ford is it's had a good run already this year, so it's kind of near its 52-week high. But to be fair, companies that make highs sometimes continue to make highs. I haven't dug into the financials yet, but I'm going to take a quick look while it's on my mind. And since it was something that I wanted to look at, because it fits in my goal of my rotating into dividend stocks. Now I know that some people think it's silly, but my goal over the next 3, maybe 5 years is to rotate out of the growth stocks that I've been getting into over the years that have done quite yet well and move them into big old boring dividend companies because I hope to actually use those returns to help pay for bills and get into retirement. If you haven't checked out the other channel, it's called Dividend Retirement because the goal is to get into retirement living off of dividends. My what's the word I'm looking for? I've been watching the videos of the Gen X dividend investor inspiration, and that's kind of been where my inspiration has come from. You know, he worked a job in the tech industry for a while. He was a saver. Finally got to the point that his portfolio was bringing in enough income that it was more than his salary. And then he's pseudo retired. Now he says he's retired, but everybody wants to have something to do, and that's kind of why I do these YouTubes too. And I think that's probably why he does it. I'm guessing he went to retirement, and as his kids got older and his wife still works, he wanted something to do. Now, I'm similar, and I'm not looking to delve into it and get phenomenal at the editing or things like that. So I just kind of turn on my phone, hit record, and then I've gotten this one thing that I play on a little bit, and it gives me something to do to keep my mind busy as I kind of rotate to that as well. I haven't really left work, but I really don't work as often as I do, and I'm not hustling the way I used to because I enjoy my time. I love my family, and the time passes so quickly. I don't want to lose any moment that I have with them, and then there's this other guy, Azul, I think that's his name, who talks about retirement and how people put it off until like their 60s and how they wait until they're too old because their bodies and their health is not nearly as good. So that kind of really gravitates with me. That's not the right word, but it really hits me in a right spot that I recognize that better to do things now if you're in the position and have the time while you still have the energy and your body still works and your brain still works before you work too many years if you're in the position, you know, like I said, not financial advice, to spend the time with the people you love because when the years pass and you wait too long thinking I just need a little bit more money, by the time you get into retirement, you may not be able to do the things you always wanted to do when you retire. And even where I am now, I know my body is more tired, my knees hurt more and everything else. I figure another 10 or 15 years that could get a lot tougher, and I want to be able to do the things that I would like to do with my wife and maybe my son, he's just getting to that age now. He's 15, and it's like mom and dad are a nuisance. If any of you have kids, and if they're older, you probably know. And he still loves hanging out with us, but he'd way rather hang out with his friends. And I remember it from that age as well. And it kind of gets like that. Like, we're trying to figure out what to do this summer. And like I said, we normally do a really long, like 6 week trip or 7 week trip, and we'll go out of the country, which I think is so cool that we're able to do that. But I do worry he's getting to that age now that he's not going to want to hang out with mom and dad, and he's just going to want to hang out with his friends and be kind of annoyed about being stuck away from home. Anyway, so let's take a quick look at Ford, and I see Lily's asking about Robinhood, so we'll talk about that as well. And I'm guessing it's because Robinhood is a stock that I've really liked, and it's had a big correction. So we'll look at the numbers, see what we think here, and then I'll talk a little bit about my thoughts on Robinhood. So let me take a look and see. Let's see what ChatGPT says first. Let's go back. Let's put it in. And those of you who check this stuff at home too, I mean, I got to tell you, ChatGPT does a decent job of just giving a basic analysis of a company. And all I put in there, and I probably don't have to say please, but I say please do a stock analysis of Ford. That's it, and it gives a really good comment on it. And when you get to the end, if you want it to compare to other stocks that it competes against or give a little bit more information, you can put in more to get more information. But quite honestly, I kind of like what it does, and it's really like AI is pretty cool, and I'm trying to learn to get used to using it instead of just doing typical Google searches. And I should probably use Gemini because my understanding is there even better. Um, so, Kasumi, I'll read that in a moment. I see it's about crypto, but we'll go. Let me take a look at Ford, then I'm going to go over Robinhood, and then we'll take a look at crypto as well. So valuation and market metrics. Current fundamentals, PE ratio is 11 or 12 times trailing earnings, which is great. I mean, that's part of what I love about auto companies in general is that they're really reasonably valued in terms of their earnings. So the forward PE is about 10 and a half, and they're currently paying about a 4.5% dividend yield, which again fits right into my goal of the dividend retirement channel. So what I talked about there is hoping to get somewhere between like a 4 to a 6% yield overall. So this I would say is on the low end, but the reality is anything paying 4 or 5%. What I like about it is if they can make that with actual earnings, it makes me really comfortable that they're able to make those payments. Like, I hate the covered call strategies and some of the others, even though they pay a little bit higher of a dividend. And I'm rotating out of things like Meta and Google and Amazon and some of the others that I was fortunate enough to buy a few years back to do this. So their price targets, I'm not going to get into that because who cares? And I like to be tough on the analysts. They don't know anything better than anybody else. Like their metrics, like some of them I really respect, a guy like Dan Niles or whatever, but any of them that put a price target, like they don't know what they're talking about. And they tend to, if you watch them, the price targets go up as the stock goes up, and then it goes lower as the stock goes down. Like they're just following the trend of the stock. Um, Valuation metrics, dividend yield is attractive for some income investors, hence me, which is what I like about it. Um, so, latest quarterly report beat expectations, but net results showed significant one-time losses, which due to the EVs, which is part of why they're probably partnering with some of these ones in China. Dude, I took a picture of like a mini van in China because I just thought it was the coolest thing. It was this EV, and they basically had four captain's chairs for the passenger seat, which is like it was so cool, and they could rotate and hang out and chat and videos and all these things. And then the front seats look like almost like massage chairs. Like when I tell you that they blow away our vehicles, there's just no comparison. And then I saw one that somebody was doing. There's that guy who does these really cool, like on the cars. It gets close to 1,000 miles, miles, not kilometers, on a full charge. I mean, my God, our best is like 400 and change. So if Ford is, I don't even think Ford, like really low 400s. So if Ford's able to partner with these guys and actually get some of these vehicles on the road for us too, I think that actually gives Ford some room to be a much better company. Um, Internal combustion hybrid strength, the F series, like the F-150 might be the, I don't know if it is, does it say? But it's a super strong car. I think the Lightning had trouble. Um, yeah, it's had trouble with their Model E division, which is their EV program and new initiatives. Um, Key risks are the losses with the EVs, but they already took the losses, so whatever, they'll move past it. Tariffs and supply chain, which everybody seems to say risk is tariffs, but it's kind of silly at this point. They've already been implemented. The Department of Justice, or the whoever it is actually deciding if they think that the tariff should be kept around or if they'll be legal or not. It's kind of funny. It's being bet on Kalshi, which I'll try to remember what I wanted to say. Stay away from that stuff. It's rigged against you. Um, Analyst view, let's see, bullish case, attractive valuation with a low PE, which is always the case with car companies. So be cautious that it says that's one of the attractive things. But solid dividend yield, which attracts me. Strong cash flow and core ICE hybrid business provide resilience. Cost reductions and strategic resets could unlock margin expansion, which I would agree with. The bearish case is heavy EV related losses, which isn't going to continue going forward. So I don't really see that being bearish. Tariff supply disruptions, which again, I think everything says tariffs, and consensus forecasts imply limited upside, which maybe, but I'm okay getting the dividend and going with there. So I'm a little biased. As soon as they started talking about it, I thought Ford fits right into my wheelhouse of what I'm looking for. Boring company that really doesn't move anywhere. Let me see if there's anything interesting in some of these numbers, and I'll take a quick look at insiders. Sorry, I hadn't done it myself, so I was kind of curious. No, nothing looks interesting. And then I'll go over Robinhood for Lily and talk a bit about crypto for Kasumi Hatoro. I hope I pronounced that correctly. Yeah, nothing interesting here. So let's take a look at Robinhood. And then here's what I will say about it as well. So, from my standpoint, Robinhood's a great company. And just because the stock price has fallen doesn't really change any of that. And when I've talked about Robinhood, for anybody who's paid attention, I have tried to be very clear about these are the risky type of investments. And I would never recommend somebody putting a substantial amount of money into a risky investment. Same with OKLO and some of the others that I talk about. They're fun because they're like going to the casino and throwing some coins on the table, but they aren't something to put a huge investment in, whatever that is for each individual person. A small investment for me might be a large one for somebody else, or vice versa. You just don't know. And let's see what ChatGPT, and I'll take a look in E-Trade and see valuation metrics and stuff like that. So real quick, let's take a look at what I look at first, which is the PE. Um, which right now, so the PE on Robinhood is 36.89 based on yesterday's closing for trailing PE, according to E-Trade, which I think is really reasonable for Robinhood. Maybe it's expensive for people who are expecting like a 19 or 20, but Robinhood is legitimately growing at a fast enough pace that a PE in the mid to high 30s is totally reasonable to me. I also think that getting into some of those betting avenues, which I advise not to do, but I think that that's probably a good moneymaker for a company like that. So Robinhood operates a retail brokerage and fintech platform providing commission-free trading in equities, options, crypto, and other financial products. So part of what I like about Robinhood is I think the younger generation is gravitating towards them, and that might be where they're opening up their brokerage accounts. So over the next 40 years, which is kind of where my timelines lay, I see Robinhood as being something that could be a potential really good compounder. Now, that being said, again, I'll repeat, I wouldn't put a ton of money into something like that. But whatever is a small investment for somebody, you might get really lucky with a company like Robinhood, which is what I like. Medium Null, I see the question. I'll talk about Pfizer as well. Um, so recent FY25 revenue grew plus or minus 51 to 52% year over year. So that goes in line why I say that a 36 and change PE is very low for a company that's growing at 51 times year over year. So it's impressive, and I think the crypto helps. Um, Trailing PE 37, forward 32. Lily, Robinhood looks attractive to me. I think at these prices, it's beginning to look like a decent investment. Again, be cautious, very volatile stock. There's some others I feel the same way. Let's see if there's any inside. I'm always interested about the insider activity to see if anything's going on. Yeah, well, the only thing that bugs me is they're selling a bunch of shares, and they didn't sell them great. I mean, they've sold them in. One of these looks like they just consistently do it. It's the same exact amount of shares, and it's all the time. Um, the only one that bugs me is back in December. Guy sold that's a big number. I mean, I'd be curious what his net worth is to see if it's a big number for him or just to me. But sold 15 million at a pretty good price, dollars, not shares. Um, does it say? Sometimes it says how many shares they have. Yeah, I mean, he sold a pretty good percentage of his portfolio. It looks if the information is accurate on E Trade, he had about 500,000 and sold a little more than 100,000. So that's a pretty significant amount of his shares. Now, anything's possible. I wouldn't read into it too much. Um, I just don't see too many buys against it. That would be the only thing that bothers me, but they might be giving a lot of stock options to them as well. The other thing is over the past couple years, I mean, Robinhood's run from, let me look at the chart because I it was under $20 not that long ago. Maybe it was longer than I think. Didn't seem that long ago to me, to be honest. Because you know, I, let's see. Oh no, it wasn't that long ago. The chart was off. I mean, back in just 2023, the thing was $9 a share. That's what I thought. I think, we bought a tiny bit in my wife's retirement account, which, I buy some things like that in there, and I put, like I said, what's a small investment to us, and then I don't even pay attention except once a year when we give a contribution and put it into something else. And I tend to buy some riskier assets because my attitude is either one day she'll wake up and be like, "Oh, how cool is that?" or not, because hopefully we have enough without that account, so it doesn't matter anyway. Um, but I remember around we were like 18 or 12 or somewhere around there, and from what it looks like, that was only a couple of years ago. The thing shot up to over 150, it looks like, and now it's fallen in half, which again, valuations look pretty good to me, Lily. So I like Robinhood here. Um, and then I know, let me see what, forgive my scrolling through. So I'm not touching crypto or any investments anymore. There's money to be made, but it is very unreliable, especially crypto. 9 to 5 is a guarantee for some value at least. Absolutely. But here's trying to make quick money is gambling. I'm staying out of the stocks and bonds, all of it. Well, Kas- Kasumi Hatoro, I hope I pronounced that correctly. I, I, Not financial advice. Please don't read into it the wrong way. But what I really hope, if you're still watching, I hope you are for the channel, is to encourage people to invest for the long term. You are right. The ups and downs over a short time frame can be really big swings, especially if you're getting into things like crypto. But to buy a VOO or QQQM or some other things like that and just slowly put away over time for your future, I'm not sure I can think of anything that's better because I would rather see you put 10 grand away and the markets fall in half and you have $5,000 in time, then you put zero away and go out to dinners and spend it on whatever you typically spend on and not save for your future. And if the markets do what they traditionally have, well, a 10% yield on your investments is phenomenal. And if you give it time and you consistently put away, you're gonna, it's worked really well over the past 30 or 40 years. I can tell you that from personal experience. I can't guarantee going forward, but I think the news is always scary and they always make it sound worse than it is. And if your timing sucks when you first start, sure, it feels really bad. And if you're investing in crypto, yeah, I would suggest probably maybe some other things because that's a big gamble. So I see the other ones. David will talk about Annaly Capital, and then medium cost we'll talk about United Healthcare. So medium, no, I love the space, and I have a very large position in Pfizer. Maybe it is a value trap, but I am totally comfortable with it. Let's take a look at the numbers real quick. But I know some of it isn't, like what it shows isn't so accurate because it's more important about their their what's sorry brain fart, but their medicines coming in the future. What I like about Pfizer is they're pretty enmeshed in the system. I am sure that guy who goes on CNBC and is a contributor has connections as well as in the political world and everything else. And I think there's a certain point that that just matters more than anything else. And companies like Pfizer, like if it just sits where it is and does absolutely nothing and pays, I think it's paying a 7% dividend or something. Like to me, that's exciting. I know it's not exciting. I don't want to overstate it. It's not like, oh, that's the most exciting thing in the world. But Pfizer pays enough dividend. If they make enough money to be able to pay that dividend, yeah, 6.25, and that's after it's been up a couple of bucks because it's at 27.5, and I know it was like 25.5 recently. Now, I tend to play around with Pfizer. I have a nice position in my set it and forget it account. Those of you who haven't watched the channel a whole lot, I have two primary accounts. One is what I refer to as my set it and forget it. I buy companies that I think are really good companies, and I plan to own them for 10 years or more. I'm going over it with my wife so that she's more familiar with it and hopefully she's comfortable as well, especially as I rotate into dividends, because my hope is that if I get run over by a bus, which I have no plans to do, that those dividends can help her where she can budget and easily have some income coming in that makes it affordable for her to handle being with my son and everything else. So Pfizer's showing that it's trading at a 20 times earnings, which sounds really low, but for a company like Pfizer, it probably isn't. I mean, if it could get back down to 17 or 16, that's more comfortable in some ways. But 20 is still cheap. And if there's a continued rotation out of things that people are seeing as risk because of the AI stuff that's going on, that'll become a bargain. I have a whole theory on dividend stocks, that I think that you might see some PE expansion even if we see a slowdown, simply because if we have a slowdown, interest rates are going to go down as people's CDs mature and they start rolling, and all of a sudden they go to their advisor. They were getting 4.5%, and they're like, okay, well, what's a CD pay now? And it's not nearly the 4.5 that it was. They might gravitate to a thing like Pfizer that pays a dividend and feel like, well, as long as they're making enough money to be able to pay the dividend, which I'm pretty sure they are. I'll take a look at their free cash flow anyway, but they've been doing this a long time, so I don't really see it in jeopardy, even if they're pushing the limits. Um, but I think you're going to see people rotating out of those CDs and then buying stocks that pay dividends, even if the economy's slowing down, where you might see multiple expansions. The only way I don't really see these companies thriving is if the economy does great and tech stocks just continue going higher, and then this stuff stays out of favor, because when Google and Amazon and Meta and all these others are going up 20, 30, 40% a year, well, nobody cares about Pfizer. But I like to have a nice balanced portfolio, because when those things aren't going up at that rate, all of a sudden people start jumping into Verizon and Pfizer and all the other stuff. And I think that's the rotation that we're seeing currently. I would like to see it be a little more broad based and evened out. I think this AI sell off is a little overdone. So I wouldn't be shocked to see some of these dividend stuff have a little bit of a pullback, but I think there's a little bit of an extreme panic out there that it is possible it changes the world. People are worrying about the way they think, but maybe they put Adobe out of business, but in the meantime, Adobe makes good income, so maybe they don't, and you're getting a bargain if they don't. So it's just a balance, and I just feel like that this AI is going to change the world, which, like I said, maybe it does, has just gotten so overblown because things tend to happen slower than people expect, and they tend not to happen the way they expect. Like, technology happens, but anyway, that's a whole long thing. And yeah, I really like Pfizer. Let's see what ChatGPT says first, or OpenAI, or however you want to refer to it. Um, Recent guidance slightly below the prior year due to declining COVID-19 sales, which that's actually not great for Pfizer, but good for the rest of us. But earnings per share guidance of about $3 per share, down modestly, and the dividend is 43 cents, so 4 8 12. So if they're going to make $3 and they're paying $1.70 over the year in a dividend, like, that's super comforting to me. I'm more interested when I'm buying Pfizer how secure that dividend is, and if it's secure, then I'm not worried about much of the rest. And over time, the price will work itself out, and it's been so out of favor for so long. If it starts drifting higher, like my hope in a Pfizer is that the price doubles over 10 years. Like, I don't expect it to really be any just, barn burner that's doing great. And if they can raise that dividend slightly each year, and I'm already starting at over a 6% yield, what a great investment. Dividend yield 6 to 6.5, payout ratio. It's saying it's 126%. Payout ratio can be suppressed by non-recurring items. That's what I think. And the guys at Pfizer have been doing this a long time, so you can see that happen. It tends not to stay that way, and based on their projections of their actual earnings, I don't think that that's accurate. I'm guessing they had some costs and they wrote some things off. Net debt is significant, which is always the risk with Pfizer. They've invested in a lot of, yeah, reflective of past acquisitions and some cash deployment. So I know they've bought a bunch of things. I still think if any company that you're investing in, you kind of have to trust the board members. And the guys on Pfizer, there's some pretty bright guys. So let me go to the risks. Patent expiration. So several blockbuster drugs face patent cliffs, which could materially reduce through 2026 to 2030 if generics capture the market share. It's funny, that made a lot of nervousness in AbbVie And I've noticed that it gets a lot of companies really nervous when those patents are expiring, but it doesn't seem to hurt the earnings the way that they think. Um, the COVID-19 falling off, of course, which we're well aware of. Moderna is another one I've been curious about because they really collapsed the other day on some stupid thing. Um, Analysts forecast modest or even declining earnings, which is why the stock flails around. But again, I think they're making enough to pay the dividend. I'm not super worried. Bullish case, attractive dividend yield, diversified business with strong core franchises, and that's just, yeah, cost optim. It's a good company. So anyway, the long answer, because that's how I always am. Medium null. I love Pfizer. There are a lot of guys on YouTube who hate it, um, but some of the ones they hated Target too, and I think that that was such a great investment. I don't see Pfizer as good a one as Target because they're more comparable to the others in their space. But Bristol Myers I really like, and since David, I'll get to Annaly Capital, and since Medium's asking, I love United Healthcare too. Um, my only issue with United Healthcare is I do think the timeline from when I bought it when it fell the first time is now extended. I do think that the increase of the Medicaid and Medicare, along with their costs going higher, is a legitimate squeeze on their margins. But I still think they're a good company, and when I bought it, I planned to have it for 10 years. I just think now I'm really going to have it for 10 years, where for a little while I got excited that maybe over the next year or so we'd see it totally rebound and go back to its old highs. I don't have that optimism at this point, but it doesn't change my thoughts on United Health. I think they're a good company. Maybe they need to get to the next administration if that continues with the Medicare, because I think that was kind of bull. I think that raise was. I don't know if they've created an enemy with the administration or if it's just what RFK wants to do for healthcare. But the problem is, I saw a really good article on it. If you're squeezing the companies, what ends up happening is they're not going to insure the people who they need to insure the most. Part of the reason that they're able to profit and do what they do is they're taking on patients that nobody else wants to be insuring, which is elderly with health problems. Well, if they start squeezing them on the margins of what they're able to raise or what they're able to receive for those Medicare and Medicaid payments, where it becomes too big of a loss, unfortunately, the results are going to be terrible. And I don't mean for United Health; they're a publicly traded company. They're going to make the adjustments they need to make. But in terms of taking care of our elderly, like, unfortunately, it's just a bad position. That it's how it works. So I would hate to get them squeezed too hard. So let me take a look at Annaly real quick, David. Um, what is it? NLY, right? It was one of those that I was getting attracted to just because of the dividend being so high. Um, oh, good one, Lily. I'll talk about HIMS for a bit too. And it fits in with the healthcare stuff. Um, you know, I get attracted to the Annaly stuff, but to be honest, look, everybody's got it a strong buy. I got out of it because there were things I didn't love. Let me take a quick look at the company overview. So, Annaly Capital Management is a diversified capital manager with investment strategies across mortgage finance. It owns a portfolio of real estate related investments, including mortgage pass through certificates, collateralized mortgage obligations, credit risk transfer securities, and other security representing interests and obligations backed by pools of mortgage loans. Its investment products including blah, blah, blah. So basically, they're investing in mortgages. The market has slowed a lot, but that may not impact them because as mortgages slow, if they're getting a 12% yield, which is what they're doing, they're investing in some of the non-traditional stuff, which are not bad products. Please, I hope if that came out like it sounded like they're taking on a bunch of risk. So, another little disclaimer, I've done mortgages for a long time, so I have a bit of an understanding of these things. Um, there are non-traditional loans still. It is not like they were back in 2006, 7, and 8 when we had the correction. That was a different loan. There was this option arm that they were using, and they were also using like no money down with stated income and assets that were super risky. If you had good credit or even decent credit, you could get a loan by saying, "Hey, I make $200,000 a year and I've got $1 million." They asked for no documentation, no nothing. Like that was what happened back in 2008. Looking back, it was very easy to say it was very obvious it was going to happen. On top of those type of options for people, they offered what was called an option arm. It had four different options when you got your statement of payments you can make. So if you're not familiar about that, it's very important in terms of understanding the 2008 correction for real estate and why I personally do not see that happening currently. So you'd get your statement in the mail and it would give you four options. And they would have a huge range of how much those payments are. My sister had signed up for one. She got it out in Arizona. Her loan officer told her this whole big thing that I was like, oh my God, please no. But you'd get it in the mail, and I think her payments, like the lowest one was 800 or so. There was one for 1100, and then the next two jumped up significantly to like 2200 and 3000 and change. The reason is you were able to make like choose between four different options. You could make the equivalent of what a 15-year mortgage payment is, which we all know, most expensive, pretty aggressive, trying to pay things in 15 years. You then had the option of making a traditional 30-year mortgage payment. The next option, which was significantly lower, was what's called an interest only payment. You're making no contribution towards the principal of the home. You are only paying the principal, keeping how much you owe the same on the property. And then that lowest payment was actually negative amortized. And forgive if I say it wrong, I always do. But what that actually means is you're paying less than just the interest. So you're actually adding on to how much you owe on the home. So if you put nothing down, especially if you took a second loan to be able to put the down payment and bought a house for 400,000, you could end up in a position where you owed more than the $400,000 by the time that what was called seasoned. Usually they were 5 years and they started in 2003, which is why the collapse came around in 2008. Actually, they've been around a lot longer, but they weren't being used so aggressively until 2002, 2003. So what ended up happening is people ended up owing more money than they originally had bought the house for. The house prices started to correct, and all these realtors and everybody who told people that house prices never drop, people found themselves in a position where their house was worth less than they owed. And now that it's seasoned, you had no option but to pay the 30-year loan mortgage. It didn't come where you still had those four options. So people went from having like an $800 payment to having like a $2,000 or $3,000 payment, and they were totally shocked. They had no idea. They had lied about all the information when they filled out the paperwork, and they all got super angry instead of figuring out that things don't work that way. Well, fast forward to today, we don't have those types of loans. So the type of loans that Annalie is more likely investing in is what's called a debt servicing loan or a bank statement loan, or what are some of the others? There's some that are called asset depletion and some others. They generally use a decent sized down payment, but because of the risk, they get paid a higher interest rate. Now, I don't know this for a fact. I would just have to dig into their books. But to be fair, when these loans today are used, typically the investor or the person getting these loans are pretty sophisticated. Sometimes they need experience with already having rentals. So, like the debt servicing one is a rental property type of loan where it has to be getting more in terms of rent versus the cost of the payment of the loan. The asset depletion one is one that if you have a lot of money, but it's tied up in other things, you still need to put a decent down payment. Usually they want 20%. There are some programs that'll allow to 10, but usually they want a traditional 20% down payment. Otherwise, the interest rate goes even higher. But the asset depletion, if you have a couple $1 million, but it's tied up in other things, you're able to divide that out over a timeline and use that as the equivalent of like a salary if you don't have another type of salary. And a lot of times it's an option for people who might own restaurants or self-employed that write a lot of things off. That the bank statements work for these people who know that they really make more money than what they're able to show on their taxes. They end up with a higher interest rate than a conventional loan, but they need good credit. They really do their research. It is not the same as the crazy loans that were being given out years ago. And most people aren't just going to walk away from a property that they put 20 or 25% down on. So if that's what's on their books, it's very likely they're able to pay out their 12% yield, because if they're leveraged a little bit or pushing could be a legitimately good investment. I stayed away from it. I do like that everybody seems to like it. And I know I was super attracted to the 12% yield. So if I were putting, you know, 1% of my portfolio or two into something like this to kind of push those dividends a little bit higher, I don't see anything I don't like here. Let me see what ChatGPT and the others, now that I went on my dissertation about Annaly. Um, Agents, residential credit more. Yeah, they essentially get all of their money from interest spreads, borrowing short term in the repo market and investing in longer durations. It's very sensitive to interest rates, but they've been around a while, these guys. Um, let's go to what their risks are. So the bear case, the yield curve inversion compresses spreads, which I think we're long past. Like, I don't see that as a viable. Those of you who don't know what the yield inversion is, when the short term rates get above what the longer term rates are, but that's in an environment where they're raising rates, not in the one we are now where they're cutting rates, where I think the yields are more likely to normalize, which they already have. Um, Further rate volatility reduces book value, dividend cuts during weak earning cycles, and leveraged so they're leveraged. I mean, that's the risk. But I think if the risk is that the yield inverts again, maybe it's a good company. I like it. I'm going with Annaly Capital. I do. So anyway, David, I'm kind of staring at it because as I'm trying to get into my dividend rotation, I mean that's one that's attractive to me as well, and maybe it's worth me throwing a few dollars at and getting a little bit of a boost. If I'm trying to hit a 5% yield for the total portfolio, and I can put 1% or half a percent into something getting 12%, that can make a big difference on something. It's also I've owned PFFA, which is the Virtus fund, and oh, no problem, um, for years. And people don't like the expense ratio, but there's a reason for it. It's not just them taking money. And what I can tell you is I've had it like 4 or 5 years, and they have been paying monthly like clockwork, which makes me super comfortable with it. So I know others I've seen, and there's some who love it and there's some who hate it. Anyway, Annalee, I think I'll probably put a little into myself as well. Um, so Lily's asking about hymns, and hymns is a great one for me to talk about because that goes along the lines of what I've said about there's some things that you just can't predict because I'm annoyed with hymns, and not because I'm down money like that. I got no issue with things that go up or down or whatever. But what really annoyed me about hymns, the reason it fell this last time, so they a while back where they really started growing their profits and doing phenomenal is they started doing compounds on these GLP-1s. I think that's what they're called. Um, Ozempic, Wegovia, all of those things, and they were underproducing them, so there wasn't enough out there. They got an approval by the government to be able to do compounds on them since there was so much demand and there just wasn't enough of the supply. Once they caught up with the supply, they were told they could no longer offer the compounds. Anybody who doesn't know what compounds are, companies like Hims can mimic the drug that has a patent and be able to make the same type of drug and sell it for a lower price. So they approved them to be able to sell these compounds, even though it was still in patent. And I don't want to say it shouldn't be allowed. It was agreed. It was okay. And they even had an agreement with like Novo Nordisk and some of the others. Well, once the companies caught up with the demand and they were making enough of the products that they had the patents on, Hims was told they could no longer sell the compounds. What did they do? They kept selling it until they got yelled at, smacked on the wrist, told they can't keep doing that. Okay, I'm okay till there. What I'm annoyed at is recently one of them came out with the GLP-1 in the pill form. So, Lily, this is what I don't like about Hims, but I still own a tiny bit. And at this point, I'm kind of just shrugging my shoulders, going, well, if it goes to zero, it goes to zero. Goes in line with position sizing and everything else. So, never buy too much of a risky investment. What bothers me as to what happened recently is they started doing compounds on the new pill that is going to be issued. And I don't think they had approval to do that. So I think it's Novo Nordisk. Please feel free if somebody knows that I'm wrong or if you Google search, is now suing them over it. And forgive me if I'm the judge and before you already broke the rules and now you go out and you just do it again. uh, I would be pissed as that judge, and I would really punish them. And this is coming from somebody who's a stockholder. Well, unfortunately, these are things that you just can't predict happening. I've talked about it in other things like, you know, Archer Daniels Midland, the guy on the board who was lying about the financials. I, you can't see that coming. Like you invest in the companies, you trust the information you have, and they're just things that are out of your control. That's why I personally diversify and don't go too heavy into just one thing. And anything that I am too heavily invested in is because it's had appreciation, not because I just put a whole ton of money into it because I just knew it was the next greatest thing. Hims and hers pisses me off. Like, they did really well when they were doing those compounds originally. They grew their customer base. The company was doing just fine. So I don't understand, like, other than greed, and it concerns me about who's actually on the board. It bugs me that they did it again without permission. I understand that they went a little too long the first time, like we all do stupid stuff. But if they didn't have permission to offer the pill version and just decided, whatever, we'll do it to try to grow our business, again, if I'm the judge, I would punish them pretty bad. I would, I'd put them out of business. And I am not selling the stock. I am sticking with what I had because I bought little enough that doesn't matter. And if they don't get punished so bad that they put them out of business, man, they are growing at a fast rate. I do think that they are going, like, it's like Netflix to some degree. I think once people get used to them, if you're having your medicine delivered to your house, I, I gotta imagine you just keep doing it. Like, you don't really cancel or change, or it becomes really easy and convenient. And I'm guessing they're good at that. And that's my understanding. They started with, I could probably use it, the balding drugs. Like, they tend to start with things they consider embarrassing for people. And I'm guessing that's why they're going after the weight loss too. But I think once people start getting that stuff, They get all their medicine there. And if you're getting your medicine from a company dropping it off at your doorstep, I think their competition could be Amazon, but I'll still repeat the thing about Netflix. I thought Amazon or Google or Apple would just destroy Netflix, and I was dead wrong back when Netflix was fell from 1,000 to $100 a share. I feel the same way about hams. It's fallen from the year high of 73 to 16. If I didn't own it, like to me, spending $1,500 is not a lot of money. I would have no issue buying 100 shares and feeling like living in Las Vegas, like I just went down to the casino. And if I get paid off, they're gonna really pay off. Like they're only trading at a 30 times earning, growing at a really rapid pace. And I just, anybody who's getting their stuff there, I don't see them making changes. Um, Thank you, Kwan Lia, and I'm glad you like the analysis. Uh, and I think Amazon and stuff, they're too stupid to like really beat them at this stuff. Again, I didn't understand why they didn't beat up Netflix at doing streaming or Google or Apple. Like they had to see that it was a good business, but they get too preoccupied with everything else. I don't really think that Amazon is aggressively going after the healthcare enough. And I think it's a mistake. I think really they should see these guys coming around and see the opportunity because there's got to be really good money and drugs delivered to your door because I have stuff that I take consistently. And if I got my ass in gear and started getting it from one of these guys, I don't see me ever making a change. And if they charged a couple bucks extra, but it just arrived, what a convenience. So, anyway, well, getting near an hour, so the timing's good. And if anybody has any others you want me to talk about, feel free to put it in the comment section before we kind of wrap it up. I hope some of you got to enjoy your Chinese New Year. Um, I hope your accounts are crushing it. I actually love the price action today. I'm hoping we don't have some big sell off at the end, but it was really good. It seemed to me, today's price action was really good. I mean, we went into a 4-day weekend. I'm sure anybody was thinking about getting out of some stuff before the day ended. If they hadn't, they got squeezed today, but a lot of companies sold off and then rebounded and came right back. Let's take a look. I'm curious. Like, I know Meta yeah, and they're trading 640. That at least right now they're up on the day with an hour to go, but they traded down. Let's see. Look at that, 628. So they breached the lows from last week. They looked really scary and then reversed. Um, I have it in my set it and forget it. I kind of watch every now and then, but just so people know, like I set it up that way on purpose. Like I don't have online access to be able to trade it. It's in an account that I have to call a guy who's not always at work, and I like it that way. It's like putting it in a safe deposit box like you did in the 80s. Uh, anyway, have a great week. Be sure to check out my dividend retirement channel. I may even try doing the live on that channel starting next week. I'm actually really excited. I have over 50 people who've signed up and are subscribed for the channel, which I think is super cool. I know that may not sound like a lot, but I'm thrilled with how it's going so far. And it is kind of a journey that I'm on to rotate into dividends because I love getting those checks. Hopefully, everybody's near their all time highs for the account. Enjoy the rest of your Tuesday. And I'll try to post on both channels. I've been kind of rotating. So either one is good. Have a great day, and I'll talk to you guys soon. Bye bye.